Good afternoon, everybody. It is Saturday afternoon, August 14th. Welcome to the weekly Plus3 forecast futures and commodity show. My name is Ben Maldonado, and as always, I'm joined by Barry Hederachi. Hey, Barry, how are you?
Doing pretty good.
Yeah, survived another week, right?
Yep.
So let's jump right into it. Today's show, we're going to cover a lot of ground. Barry's going to do the big five that he does every week. He's going to review the ES, gold, crude, bonds, dollar. I'm going to cover select markets this week, including the 30-year treasury, wheat, gold, silver, and all the softs. So without any delay, let's jump right into it. Let's start as we always do with the proxy for risk, which is Bitcoin. Bitcoin has been doing very well and with a nice orderly uptrend since we broke this steep downtrend line, tested the edge of the triangle, got back above the square, and now we're sitting in a very bullish position with the next test coming at the half square, around 50,700. As far as I'm concerned, there's nothing bearish about Bitcoin. It looks bullish, and it looks like higher prices are coming. What do you see, Barry? Are you there, Barry?
Yeah, I'm here. Well, I think a test of that 50% line is in order. And more importantly, probably a test of the lower main line.
Mm-hmm.
See if that happens. I just don't see it being out of the gate and back to new highs just yet. So we'll watch that.
Yeah, we'll see. This 42,000 level is the level of the lower square. One thing that, in case you missed it on Twitter, we've posted a spreadsheet on a Google Doc that has all the important levels that we discuss on the show, whether it's Barry's levels or mine. So be sure and check that link, and we'll update this as need be when prices change or when the markets move. We'll update that, but you can always check the spreadsheet to see where the most current levels are.
Yes, and the link is in the description for the video.
Mm-hmm. Excellent. I'm going to send it over to you, Barry, and you'll go over the big five, and then you can throw it back to me, and we'll hit the rest of the commodities. And there's the S&P.
The S&P.
The grind continues.
Grind, yes. So let's see here. I think we left off talking about this level up at 44.37 last week.
Mm-hmm.
Saying that was the resistance and how we sort of got stuck below it for a few days, and we ended up grinding right through it. And now I would say we're in a so the funny twist is anytime, right before any market corrections, the market's at the most bullish looking spot possible, right? It's at the end of a huge trend before any correction. It was the same thing here. Back in February, if you look at that day before the first down bar, it looked just fine. So we're sort of in one of those spots. And the reason for that is the weekly chart that we've been talking about for the last few weeks. We're up 72 weeks from last year's low, and we're coming up on 144 degrees up in terms of the square. And that number, the exact degree is 44.88. So we have to keep that in mind. Anytime, I've been working with the squares for years, and anytime we come into these price and time convergences, you really have to keep an eye on the markets for any kind of a sudden changes or corrections or whatnot. And we're expiring a number of cycles up here, so we really have to be on the lookout till we can settle above, let's say, 4,500 or 44.80. 44.90. So in other words, we have to settle above the 144 degree level in order to set up for the next phase of the market. This leg could be ending up here right around 4,500, anywhere between 4,470 and 4,500 fair game for this to terminate. So I'm calling for that here, because you don't get these huge full square marks all the time. So in the last entire year, we only had one, which was the 72 mark, which we hit last August, and now we're up at the second one in an entire year. So I think it's fair to call that out and be a little cautious in here. Going back to the daily, let's take a look at this. I want to add a sort of a drop dead level that we need to probably look in case we do get some kind of a correction. And that level would be around 44.10. And that's something we ought to watch on any kind of a correction. This 44.37 is also important. That's sort of, I would look at that as a minor support. And if the market is super strong, any pullback should hold above that. But 44.10 is really the key level I'm looking for on any pullback. Also, it just happens to be right on top of these, the old, last couple of weeks consolidation. So I'm bullish on the market, being a little cautious. Really, the two lights we want to watch is sort of a yellow light if we take out 44.37, and a red light if we get through 44.10 for any length of time.
One of the things we also talked about, Barry, was that we're getting some pretty glaring divergences. I was looking in my notes on a weekly and daily basis. We have some pretty strong divergences that add to your sort of reasons for caution here.
Yeah, we're getting some divergences. Market's looking tired, although, it's not in a, let's just say, young part of a bull market, which we had from April to September or last year. It's looking a little tired, but that's okay. It's just we have to watch this time segment. 72 weeks is no joke, and we also have some price resistance. So just to watch that, that's all.
Mm-hmm.
So that's a call for the ES. Going back to the bonds, last week we were looking for support anywhere above this half square, which was 162.07. I'm going to raise that to 162.18 or 20. I think this last low was pretty much right on. These squares aren't exactly to the tick. So I think anyway, around 162.5 is probably a good support area to watch. Resistance is around 167.10. I'm going to adjust the 165 number. To 10. So for now, expecting the market to be firm above 162.20, around that level, and resistance around 166.10. So it's possible we hang around here for a little longer, and it's also possible we go up and try to check the 66 level again. But the main trust we had, starting in May, definitely took a break. So we're waiting for the next setup. It's possible, if we take out the 50%, the 62.20 level, that we go back and visit the 59 level below, that we got from the weekly charts. So that's something to watch. Those are the two levels we're watching. And going back to the weekly on the bonds, again, all the resistance was right around on the quarter square coming off the high. This is on a square of 52. And the key level, the major level on a weekly basis was this full square down, which was 160, around 160. That's anything you want to add to bonds? You're going to cover bonds later, right?
Yeah. I'm gonna have a look at bonds, because I agree with you. I think we either got to go up and take out the old highs, and then it's the next leg up, or if we take out the recent lows, we're going to start a new leg down.
Right, and that'll set up a nice ABCD down.
Sure.
As a test.
Sure.
Moving on to crude. Let's see. Last week, well, we were looking at the 66.83, 66.80, or 75, let's say, to round it up, to be support, and the market basically held in that area. And so the call for now is that this 66.75 area should be held, and if we get stuck under it, it's probably going to, trade down at least at the half square, which is around 60. Mm-hmm. Nice round number. So far, it's performing okay. Okay, meaning it's holding above the support level that we called out, but it's looking weak. Ben, this is not exactly super strong performance. So we're going to really have to watch this. I'm looking at the 66.75 as a key balance point, meaning if we get below, we could really go down and flush these lows out, which is around $57. So 57 to 60 becomes a target if we take out this. So that's another, $5-6 down.
And I think Barry, you're right, spot on crude, and it's what I'm seeing in a lot of the commodities that we cover. Mm-hmm. It's a longer term bullish structure and bullish posture. Right. But this next week or two, the next wave that's coming in this could be one more move down, like a flush clean out move type of thing. So I agree with your analysis. Shorter term, it's cautious, but bigger picture, still very bullish.
Right. Bigger picture looks okay. And speaking of bigger picture, let's take a look at the weekly just for reference.
As we were talking about earlier, there's a lot of jockeying, a lot of positioning going around in the markets, man. All different markets are showing this, misdirection, indecision, all kinds of shenanigans going on right now.
Right. So looking at the weekly, and we've been using the 72 square on this for the last few months. Again, we were looking at the 72 degree mark to be the target, reasonable target, which was $79, and haven't quite gotten there, but haven't exactly sold off either. So it's probably going to consolidate here between the levels we talked about for the daily, and which being 66.75 and 79. That's sort of the range. And as you can see, we're towards the lower end of that range. So it's really a matter of either breaking this trend line or getting stuck under 66.75, 67 essentially. And that's a call for that.
Mm-hmm. About gold. Gold was really busy last week.
Gold was amazing last week. Eh? Mm-hmm. So just to catch up, if you're not following the story, we were looking for weakness. We broke the fork and take out this 1789 level, which we did. And if we did that, we were looking for a test of the old lows, which we got, and a very quick return. What did you say, Ben? It was just hours, right? On
the first bar on the open, they just sold it right off,
and then recovered. So again, now the resistance level is around 1789, 1790, and we're really looking to see. That's really a key level. I can't tell you how important that level is in order for it to continue higher or not. Mm-hmm. So we'll see if we're going to make a lower high, install at 1789 or not. Bullish on gold for, mainly because of the weekly is bullish. Going back to the weekly, this is the weekly gold chart. Again, we made a long way. We're a long way from the lows that we had back in 2015. We had higher lows all the way. And even this low we had in March of this year was a higher low in terms of the weekly structure. And so we're okay. We're kind of scraping the lower end of the band here. In other words, the lower end of the 52-degree square. And as you can see, it's a key level. And we stopped here in March, came back. I thought for sure we were going to do a false break, and we didn't. So there's a lot of buying came in after that low was put in Monday. And now it's really a matter of, are we going to get back into range here and get back above that daily 1789 or not? I think if we can get above 1789, we can look at gold to be bullish in the short term. Otherwise, I think the correction or the consolidation is probably not over yet.
Mm-hmm.
You have anything to add to that?
No, I'm going to take a look at gold because I feel similarly like a lot of these commodities, longer term, like on the weekly, monthly, very bullish. On the daily, probably need one more push down, some sort of clean out move, and
right.
Let's see how it plays out. But I'll go over that in the charts.
Okay, let's move on to the dollar.
Yeah, let's see the dollar.
Well, dollars have been anything but quiet.
So, it's true. And it's only just getting started.
All right. We've been bullish. If you've been watching the show, we've been bullish the dollar since the low came in. And especially after 91.40 level was taken out. And we've been looking for any pullbacks to hold above 91.40, but especially above 91.82, which is this quarter line on this quarter 72. And the last correction held above that. Then we pushed back to test the highs, and now we're on a couple of day counter trend. The key thing now is if we can hold above this 92.50 or not. And we do have a trend line drawn in, and prices at 92.52. So we're right there. So my take is dollar is going to consolidate in this range for maybe through next week. But we're looking for strength above 92.55 and weakness below that. So that's sort of the swing bull or bear line we're going to watch next week. And just as a reminder, let's go back to the weekly dollar. Again, we're stuck in this range for the last month or two. Clear to see we're at the upper end of the range. It's just a matter of, like I said, either we're going to consolidate longer or we're going to go on higher and test the 72, which is the 94 area up above. Yeah.
Mm-hmm.
Gold weekly we looked at. Let's just take a quick peek on the euro. Well, we've been calling for a check on the old lows back, lows that we put in back in July, and we got that last week. And we did make the false break here on a daily basis. But the downtrend still, the 50% of the square held fairly well, and we made a new low. So you have to go with the structure. You have to think that this is still not done, and we could see lower prices. But I think the weekly picture is interesting because for months we've been following this, mainly the fork and the square. But this, the main line on the fork is really critical here. It's a matter of, are we going to lose that or not? And you can see last week we came down just enough to break it and rally it again. But if you look at the weekly, look how many weeks we've been down. And although we came back to the support line, I'm not convinced that we're done with this. So we'll watch the key levels to see how we do. For the euro, I'll add these to the spreadsheet. If not, I'll add them to the chart after we get done. But support is around 1690 and resistance is 1964 So those are the two levels, and I'll add those to the spreadsheet that we have. I think that's all I had to cover this week.
Excellent.
All right, let me put it back to you.
Okay.
Well, there is the NQ, Ben. What do you got to talk about today?
Yeah, it's a new week, same cliffhanger. As you could see, for the last 2-3 weeks, we've been banging up against this full square resistance, in the 15, 120, 125 area, and we just can't get through. It's kind of not how a bull market acts. Usually you get through, you pull back, you test it, and then you go. Here we've hit it, 1, 2, 3 days, 1, 2, 3, 4, 5 days, 6 days, hit it again on Friday. So it's trying, it's holding, but it seems like just hanging on by its fingernails to me.
Tell you what though, Ben, your levels on the NQ are like rock solid. Eh? Look at that line.
Yeah, really nice.
Right.
Really nice. So we do know that if we get above and sit on top, we got to be bullish.
And right? What's that level? What's a level there we're looking at?
It's like 15,120, 15,125, 15,125 in that area. So we got to watch.
We haven't
closely.
had to close. We only had one close above and got beaten right back down.
Yeah. So it is a critical level, and we're struggling with it. We just have to see how it's going to play out. Right now, probabilities favor the downside because, as Barry said, only one close over. It's been banging its head up against it for weeks now and just can't get over. So
and it broke the trend line, more or less.
And it broke the trend line. Yep. And now we're back testing the trend line. So it's potentially bearish situation. Definitely needs to be watched and monitored and make sure, because there are trading opportunities either on the bullish side if it can get above and sit on top, or the bearish side if we can actually break down here.
You have an ascending triangle there, and they could often at the end of a run, if it is the end of a run or even a correction, it could false break to the upside and roll over. So
that would be a classic move, wouldn't it?
That would be classic. So that's it. That potential's there because it's at this main line.
Absolutely.
Yeah. Okay.
So we got the level, we watch it, check the spreadsheet, and you'll have the same levels we do. So here's the 30-year bond. Barry spoke about it in his review of the Big Five. I'm putting it up here because I really think we have a kind of a coin flip type scenario. It can go either way, where we start another leg higher, or we actually turn down and have a sharp move lower. The good news is we've got levels that give us sort of defining markers of where one scenario is more likely over the other. On the upside, this half square at 167, if we can get up there and clear that, the next leg higher started. On the downside, we're looking at 163.17 area for this full square. If we reverse back below this, I think you got to be looking on the south side with bonds going down and rates going higher. I think it's pretty binary. There's a possibility we chop around in here, but where we are in this move, I think, we're going to get a decision here sooner rather than later about which way we're going with rates and with bonds. Anything else you got to add on bonds? I know you talked about it earlier.
Yeah, no, I think we're good. It is a binary moment, and we know what to watch for, so we're good.
Okay. Another one I want to look at, I'm only going to look at one in the grains, which is wheat, because this one is the one that's been strong. We highlighted it last week as the one to, that was ready to move, and one that if you're going to play is the one you wanted to be in. Grains continue to be overall long-term very bullish. Wheat, corn, soybeans, they're all very bullish. The corn and soybean charts, I feel like, based on my analysis, that they've got more work to do, whether it's chopping around or doing some sort of clean out move and with a false break low and taking out their recent lows. That's kind of the scenario for them, I think. Because of that, I'm not I'm not super bullish or want to get involved, especially, if you're using options or something with time decay where you want to get involved at this moment. But wheat is very, very bullish. The reason for the caution is only that these grains do move together. So if corn and soybeans have to do a clean out low, we'll probably see some kind of pullback in wheat. That being said, we know the levels to watch if you want to get involved. The first is the full square, like it's around 749. More likely, if there is a clean out low in the grains happening with soybeans and corn, this half square is probably a good spot to watch, which is around 709. Or if it really gets going, the full square at 669, 670 area. The key thing with the grains, Barry and I were talking about this, we do have some timing for September. So September's not that far away. We're 2-3 weeks away from September, where if we do get that move down, if we see false breaks, on soybeans and corn, wheat is the strongest horse. If it comes into support, getting a position in wheat would not be a bad idea if the grains are something you're interested in.
Ben, I was noticing that, the low was pretty close to the main line there, your main level on the square.
Mm-hmm.
And being that we made a new high, if we don't take out that high bar, low of the high bar, which would be a false break, right? That would be a false break.
Yeah, right in here, right. Yep.
But if we don't take out that immediately next day or two, then it's in a very bullish position, because it's above
Absolutely.
the line, right? It's ready to go. So that's something to watch.
This is the reason I highlighted this one. Unlike the other two, there is, a marker, as Barry said, this full square. If we stay on top of that full square, man, that's super bullish, super bullish. So we're on top of it. Just pointing this one out as the one horse to ride right now in the grains. Gold, Barry talked about gold, and I'm of the same mind as he is on gold. I would love to have seen this, this flush low that they did, come down and touch the ABC, take out these lows, create a nice false break, and everybody thinking this thing is going to hell in a handbasket. But we didn't, and we bounced up strongly. So with gold, I think we're looking at one of two scenarios. My gut is telling me that there's another clean out low coming. There'll be some more weakness. They're going to take the stops out, clear this low here, get everybody scared. Maybe we actually do make it down to the full square or this 1/8 portion of the square. And we'll know if it turns down in the next day or two this week that, hey, we're going to go down and test that. Really to say, okay, this was the flush and this was the clean out low, we need to get above this here. This is the, 833, 835 area. The full square is at about 810. To really, sort of get the all clear and say we're safe, we got to get on top of this square and sit up on top. If not, we're in, I think, a vulnerable position where, they could play some more games and clean out this the stops that are down here and see what more inventory they can get before the big move starts. So it sort of fits, it jives with your view on gold as well, doesn't it, Barry?
Mm-hmm. Yeah, I think we have that framed well.
Silver, it's a similar situation. What I did here was I drew in a trend line that can sort of be used as a guide to say, hey, maybe we got the all clear on this a little sooner. And because silver's been going more sideways than gold, I said, but if we can break this down trend line, we can really start looking north on silver again. Until then, I think it's vulnerable to come down and clean out these lows here that were last fall, come down and complete the ABC. We're holding on the bottom of the square, which is nice. That held very nicely in the pullback, the bounce off the pullback. The actual low, we did come down. I'm sorry, I missed that. We see the bar. We actually did complete the ABC.
Yeah. We just didn't do a false break going back to the old lows in last September. So.
Not yet, right? And I just, in the history of the way these guys operate, man, that is too tempting for them when the move north is actually coming. They barely leave or rarely leave that sort of change sitting on the table. They usually scoop it and take it with them. So I do think we have some more work on the downside here. We know if we break this trend line, we settle above the half square. And of course, if we settle above the full square, that we're in very bullish shape. And this was the low. So we got markers to watch and possibilities we got to be aware of. The next one I wanted to go to, the next four actually are the softs. All the softs look to be in fairly decent position. As far as crude, copper, natural gas, they're all in a sort of corrective mode right now. Very bullish, longer term. Nothing's changed from the bigger picture view on those. They all have more to run. Just from a timing standpoint right now, I don't want to highlight them because it looks like there's more chop and correction that needs to happen there. So let's go to coffee first. You can see coffee's been in a bullish position. We were talking about it on the show in here as it was turning up from another higher low. Made a heck of a move up on some news. Now we're sitting right on the square here, trying to figure out if the correction is over and we start the next leg higher, or if we're going to continue, to pull back maybe to this half square here. Right now, I think it's a coin toss. Whether we get the move higher continues or we pull back. I know we have a marker now. This high we made on Friday, I think, is a good marker, because if we can clear that and we stay above on the top of this square, then the next move is up to here, the half square, and after that is the full square up here to a new sort of rally high. If instead we get stuck below this half square, and that's in the like 186, 187 range, if we get stuck below that, you got to think we're going to come down here, not only test the half square, but that structure from those previous highs in late May, early June. Coffee's bullish longer term. We're just at a critical spot here of seeing whether there has to do a little more correction or we're going to get started on the next leg higher. Anything you have to add on coffee?
No, I think you covered it. We're good. We're good on coffee.
Okay. Let's go to sugar. Sugar broke out this week in a very bullish position. We highlighted this one last week. It's still on the list because, as you can see, not only did we get the breakout, which was obviously strong and a nice move out of this half square here, but look at where the lows were for 3 consecutive days, all on top of that square. That's bullish. When you can stay on top of the square, when price can stay on top of the square, it tilts the odds in your favor, and you know that the next stop is going to be the half square, which is around 20, 27. So if you check the spreadsheet, we basically have this thing bracketed between the high, which is the 2025, 2027 area, and 1925 on the downside. As long as we're on top of the square, probabilities favor that the next move is here to this. And then at that point, we have, again, another decision to make. You settle on top of that, then you go to the top square. But sugar looks good. You can see it's steady accumulation. Nice series of higher highs and higher lows. Let's go to the next soft. Another one we talked about last week was not cocoa. We talked about cotton. Cotton, we talked on the show about as it broke out of this triangle in this area here along the half square. Again, you can see the price action, what happens when we sit on top of the square. It gives it the ability to and the energy to get up to the next full square, which in this 93.45 area, we actually closed above that square. So we want to watch the next few daily bars, see if the lows can stay on top of that square. If they can, then the half square up here becomes the next target, which is up around, 99.10, 99.20. So cotton looks bullish, both from a longer term standpoint as well as the daily here. And the last one we want to cover is cocoa. Cocoa has been in a very large trading range for a long time. You can see this past few weeks, it's been very bullish, moving strongly up every single day last week. And the reason that I'm highlighting it is we've closed above this half square. The half square is in the area of 25.47, 25.48. Closing above that, odds are we're going to see, 27.29, 27.30. So cocoa's looking bullish, like all the commodities that we've discussed and talked about, even the ones we haven't, highlighted this week. The longer term charts are signaling that we are in secular bull markets, meaning that pullbacks will be shallow and rallies will be sharp. And we're seeing that across these different markets. A lot of the markets that we look at on the commodity side are in correcting phases and near the end of correcting phases. So why we try and highlight specific ones each week is as they give us signals and markers that odds favor that they're coming out of their correction or starting the next leg up. We want to highlight it to you. So if it fits your investment parameters, you can get involved in them. But longer term, these commodities all look good. I know cocoa is one you've been interested in as well, Barry. You were mentioning it a few times to me last week on our chats.
Yes, cocoa looks good. And well, all the commodities are active now. So lots of opportunities, eh?
Absolutely. I think you pay attention to the big picture. You drop down on some time frames, go shorter term to try and figure out the best way. If you decide you want to get involved in the market, the best way to get in, but knowing that you've got these higher time frames, these weeklies and these monthlies backing you up, gives you the confidence that you can get involved with a high probability of success. That's it for us for this week. Good luck trading. We know that we've gone over a lot of information, but refer to the spreadsheet because that'll have the levels, and any changes in the levels will update the spreadsheet. So use that as a resource, and best of luck to you, and best of luck to you this week, Barry.
Thanks, Ben, and have a good week.
We'll see you.